I used to trade supply and demand levels, but over time, structure levels have proven me to be more consistent on the S&P 500. In this video, I will show you how I mark out market structure and support and resistance levels and why it works better for both reversals and breakouts. If you want cleaner levels and fewer bad trades, make sure to watch this video. So before we head into the charts and show you the actual examples, let me just cover a few points. So many times the S&P 500, it does not come to any supply and demand levels, and it leaves quite some non-trading days if you mainly just focus on those kind of levels. So in the past, I was used to just trading supply and demand. I wasn't using support and resistance and these flips of support and resistance or market structure levels. And there were many days where I wouldn't have any single trade. And also, even choosing the strong supply and demand levels, they don't always get respected, obviously, as anything in trading. So combining those, a lot of non-trading days with, sometimes the supply and demand levels not getting respected, I was like, why does this happen? Like, there are plenty of opportunities where the market makes crazy rallies or big drops, big sell-offs from areas that are not supply and demand. So I started looking into the past sessions, like days, weeks, and months, and seeing where price actually reacted from, and I marked it out with just putting horizontal lines on those areas, and then I started spotting these support and resistance flips and just reacting from opposite highs and lows. So since then I've noticed that it changed everything in my trading. I have pretty much trades every single day now with pretty high probability and high accuracy, and I'm not missing out on a lot of big moves that the S&P has to offer. So I noticed that it just loves to react of these opposite structure levels made from like highs and lows, especially from the pre-market and usually the past one or two sessions. That doesn't mean that it's not going to happen from like previous sessions. There are some strong levels sometimes from the past like week or two. This can happen, but most of the time they react from like the pre-market highs and lows and support resistance, and also from the past 1-2 sessions. That's what I've seen most of the time. Now, what I do is I map them out on the M15 time frame, on the M30, and also on the H1 to look for bigger levels. And I use a lot the line chart just to cut out the noise and find really clean levels. But obviously, then I would adjust to the candlestick chart, and then I would adjust those levels, okay? Because obviously there's wicks in play and all that. So combining these levels with having a clear bias for the day, this can give you a lot of extra quality setups pretty much every single day. And yes, once in a while I might have a non-trading day, but that might be just because of the lack of volatility in the market, or the market is very choppy and stuck in a range. Okay, so now let's get into some examples on the chart. So here we have the S&P 500 on the H1 time frame, and we'll use both time frames, the M15, the M30, and the H1, to find clean levels. So if you look on the line chart and you just look at all these highs and lows, you can see how these highs, for example, they react to previous lows. Okay, and sometimes yes, it might be with a clean supply level, but obviously for me to have a clear demand or supply level, I need a lot of points basically that need to on my checklist, in order to validate a strong supply and demand level. I'm not going to mark out just any level, and I do have videos about that on my channel where I explain pretty much everything that I look for in a strong supply or demand level. So here we can see already that the market reacted from this low right here. Then let's take another look. We have another high right here where a massive drop happened, reacting from this low. So this is basically what I do. I just mark out these highs and lows where I see price has reacted from previously. And here we have another one. We have this high right here where it just broke and then retested and a massive move happened to the upside. We have that again right here, and then we see this is basically aligning with this low right here. So sometimes levels will be from like a week or sometimes even 2 weeks prior to when the move actually happens, and I just mark out these, and then I adjust basically. So we have another one right here. We have this high right here that got broken, then retested, and then flew up from there. So this is pretty much what I do. I would go then on the candlestick chart, and then I would just adjust these levels basically using areas instead of lines. And then I would mark out this, for example, when I see this high getting respected right here, this would be an area of interest for me. As you can see, when a massive sell-off happened, this was a level that I got into, and here for sure you could have found a nice bottom reversal trade. So these levels are pretty accurate. And I do this all the time. And the H1 time frame is mainly for like bigger levels, such as this, for example, that can go on for days or sometimes weeks. And then I would go on the lower time frame to find more intraday levels. So here we have another high right here where price came into and then consolidated for a long time, and at the end it reacted from there. So it just happens a lot of times. Here, for example, this was even on the H4 time frame. You could obviously draw it on the H1 time frame as well. We had this high right here that got broken and retested, so that would be another area of interest for me, and price didn't react from that, which is fine. And then on the H4 time frame, which I don't really use too much, but unless it's super clear. So here, for example, we had these H4 highs right here. So I'd mark out this level, and then if we go on a lower time frame, you would see that price came into that and had some reactions from it. Obviously, it took some time, was consolidating quite a bit, but obviously I'm scalping on the M1, so I could find a profitable trade even in this small move right here. So let's just remove that and go in a little bit into the more intraday levels. So for example, for today, let's remove these levels. So for today, for example, we have already some support right here that you can see. We have this low right here, and that came on top of this high. So that would be already an area of interest for me to be buying from. And then I don't really see much else in terms of intraday levels. We do have this resistance right here. Okay, so this is just basic support and resistance, but I do add these break and retest of certain highs and certain lows as well. So here, for example, this was a very choppy price action right here, and we do have this low right here that got broken and retested here. So this could be another area of interest for me to be buying from. And if price would break that, then I would look for sells. So basically, I have a lot more opportunities now to be trading, because if price comes into a level right here and I look on the bookmap and try to go long, but I don't see any good confirmation and it just gets broken, I would just wait for a retest of that and then sell into the next level. Okay, and I would do the same thing here. I would look for buys first and foremost. But if buyers don't hold this level and don't find a confirmation, maybe I take a loss over here trying to buy and the market just drops. What I would do is I would just try and short after the retest of this level and then target the next area of interest. Okay, so the next area of interest that could give some resistance would be right here. We have these highs right here, these highs right here. So then I would just try and short from here into the next level. Okay, and you can see that usually those moves are not the biggest. They're like 15 to 20 points most of the time. But obviously trading with a 3 to 5 point stop loss on average, catching a 15 to 20 point move is a great risk to reward. So this is basically how I go about my trading right now, which is just marking out a lot more structure levels, and I can trade both longs and short from each level depending on what comes first. Obviously here I would obviously like to buy first, as you can see that buyers broke this level, then retested, and then had a nice move to the upside. So if price would come back, naturally my first trade idea would be to go long. But then obviously if buyers cannot defend this level, then I would just wait for a break and retest into the next level, because price really moves from level to level, and it's rarely to see that price wouldn't react of any of these structure levels. So even here, this massive sell-off, where did it happen from? We had these highs right here, this high and this high. This is a level. Okay, we had these highs, it broke, retested, a little move to the upside, small move, but still like 14, 15 points, and then it broke. Okay, in a lower time frame, it got retested. So basically, this is a structure level, and sometimes they're a little bit harder to spot. So that's why I always take my time. I always prepare like an hour and a half, something like that, in advance of the market open, just to really have a clear idea and mark out the cleanest levels that I can see. You can see exactly where price reacted from, which is just a simple structure level. Okay, and you can see here as well on the line chart, we had this high, and this low right here. Obviously with the wicks, it came into it, and then it reacted exactly from there. So this would be a strong market structure level that I would have for today. And I don't really see any other levels right here that could stop price from going to this level. And obviously if this level wouldn't hold and get broken, well, there's a very big chance that price will just move to the next level. Now let's go a little bit higher. Maybe let's go on a bigger time frame and see if we can find something else. So Now that you guys get the idea, I think you already spotted the next level that I would see and mark out, which would be this one. It would be a very clean level. We have these lows that got broken, retested, and nice drop to the downside. So I don't really see why, if price would actually get here and break this level, I'll be looking for a retest and just target the next level. Okay, and obviously this is, we don't know if this is going to happen all in one day because it's quite a rally. But if price would break this level again and retest, and I would find a long entry, then I would still again look for the next structure level that we can find. So here we do have some resistance. Here we have this right here. You can see this high right here, and then got broken, and then retested, moved to the upside. This would be another level. Obviously, a nice sell-off happened from this area. So let's look on a lower time frame, see if we can find something. We do have these two highs right here that are opposing to these lows. So this could be a good area as well. So if price would retest this level, I think the most logical target to go longs would be this one. And this is again where I would be looking for sells first, trying to target this level. But if this wouldn't happen and it would break out, I would look for a retest again, just targeting the next level. Okay. Now, obviously, this is a big rally. This doesn't mean that this would happen today. And also, I have to consider the context of the market. So if this would happen all today, I wouldn't be looking to buy anymore this high up after a massive rally like that. But if this would happen over the next coming days, well, this would be my trade idea, basically, to either trade the rejection of this level, and if it breaks out, then just to retest and go long to the next level. So this is pretty much how I go about it. This would be, to be honest, my levels for today. As of right now, there's still quite some time till the market open, so things could change. But I think these levels are pretty strong and pretty clean. So I would just keep these levels on the chart, and then I just wait for price to do its thing. And in my pre-market plan, I would actually use a drawing tool or arrows, and I would mark out exactly what I want to see. First scenario, second scenario, third scenario, etc. Okay, this is exactly what I do in my pre-market plan. I take a screenshot of that, put it in my journal, and just visualize everything. And then after the trading session is done, and I've taken some trades, I just compare it with the pre-market plan that I have, and then I just see if I actually did the right thing right there, and or if it didn't work out, then I see, okay, why did this level not hold, or was it a fake out, whatever. Okay, so yeah, this is pretty much how I go about it to mark out market structure levels and support and resistance. It's pretty simple, obviously, the support and resistance levels, but I think it's really important that you study these highs and get retested, and then lows, and then broken and retested again. And this doesn't mean that I'm going to hold these levels forever. As long as they get respected, I will hold these levels. Okay, so if this level right here will get smashed through or retested, but then it's not a big move, and then down again, like, I wouldn't be looking to trade this level anymore. Okay, I would only trade this level, obviously, if it gets respected still, like this, and then maybe like this, then I would still look to trade this level. Okay, but obviously if price in a short amount of time would just do this, then I wouldn't be looking to trade this level anymore, and I would invalidate it and just remove it from my charts. So anyways, guys, I hope you guys enjoyed this video. If you did, please leave a like and subscribe to the channel. If you have any questions about this, just let me know in the comments down below. So thank you for watching, and we'll see you in the next video.